So what do you have to have in order to create a monetary union? What do you need in order to make this monetary union work? What kind of currency are you going to implement? Certainly, first, what you need to have is a sort of a plan. And I think at the start of this process at the European Union, the European officials, many economists, the leading economists in the European Union gathered together and they tried to develop a sort of a plan. What should we do? There are, of course, different sorts of plans to implement. We can basically implement it right away. For example, tomorrow is going to be January the 1st, for example, and we implement that currency and, we do it no matter what happens. Whatever it takes, we are to create a single currency and involve as many countries as possible. Let's try to abstract from the European Union and talk about a different group of countries. For example, we have a group of countries that do not have a single currency today. This group of countries, for example, is called the BRICS. The BRICS is a very famous grouping of countries, one of the most popular sounding names, acronyms in the past 20 years already. The BRICS was created in 2001, so next year in November, on November the 30th, is going to be the birthday of the BRICS. It's going to be 20 years. So it's already 20 years old grouping. First, of course, it included only 4 countries. But the thing is that this concept, this acronym, survived through 2 decades already, almost 2 decades. And I think this coronavirus crisis is going to be a sort of a litmus paper to test its feasibility, its sustainability, whether it's going to survive or not. The countries, of course, will survive. We have no doubt about that, because Brazil, Russia, India, and China, and even South Africa, well, they are one of the most important emerging countries in the world. China is the global leader, a global leader in almost everything. It is a leader in exports, in world exports. It is a leader in manufacturing. It is a leader in many other things. It is the largest population in the world. China has the largest population in the world. India is close next to China. They combined, they've got 40% of the world's population, or close to 40% of population. That is spectacular. The people in this country, the labor force in these countries, plus Russia and Brazil are very rich in natural resources, and well, actually they would be very good to fit together in terms of just like we provide you the resources to produce and you provide us with labor to make products out of those things. And maybe the integration process is going to work. But for 20 years, since this concept was first created, integration processes do not occur actually in this grouping, and there were no integration agreements between them, of course. So we are not talking about a real integration union. And the monetary union of the BRICS is a sort of a fantasy. What I'm going to talk about in the next hour and a half is going to be a hypothesis. This is not a real integration union, and no money can be created without some sorts of agreements. But imagine that this grouping still decided to create a currency, a single currency, and a monetary union. Of course, in order to go to the monetary union is a very highly organized integration agreement, union. The European Union went through decades of the integration process, like we know. Everything started back in 1951 with this agreement on coal and steel. And that was a very, very difficult process. Before the euro was created in 1998, the euro was introduced in electronic transactions. As money, it was put into circulation in 2002 on January the 1st. So that means half a century. It took the European Union half a century to create a single currency. We've now have 20 years of BRICS, almost 20 years, and still we had no real integration agreements to conclude, and that was a very well. First, of course, this concept was thought of as a investment product, I think. Goldman Sachs wanted to attract customers, clients, to buy into Chinese, Russian, Indian, Brazilian shares, corporate shares, into their stocks, into the most advanced corporations in these countries. That was a very good idea because Chinese stocks, for example, were growing really phenomenally. They were growing like 800% in 4 years. So if you invested $1 in 4 years, you would get $8 out of that $1 in China, if you invested in China's companies. Jim O'Neill, an economist at the Global Economic Research of Goldman Sachs at the time, back then 20 years ago, he created that acronym. He is said to have been behind the creation of this concept, and I think he had absolutely no thinking about what kind of a grouping, what kind of a concept that's going to be in the future. He did not even realize that it's going to take such great forms, very interesting forms, and such global cooperation between these 4 countries. And of course, he could not imagine that 8 years since the creation of this concept, a 5th country was going to join this forum, so to speak. South Africa, I mean, and it was accepted to the BRICS by the decision taken by the members, by the member countries themselves. So Russia, China, India, and Brazil decided that South Africa should join this forum to discuss global issues, to make agenda for the globe. And they produced those agendas for the world. They outlined their policy measures, what they're going to do. Basically, these declarations, of course, in no way obligatory. They are recommendations for the world, what you should do, or the countries. What should we do, we, the countries of the BRICS, in order to stimulate economic growth in the world? What should we do to stimulate labor activities? What should we do to stimulate technological advantage, to get out of poverty, what should we do in environment with these green investments. Well, there are actually too many goals and objectives even to talk about. To outline those objectives, I think that would take some hours just to discuss them. Usually this communique, which is being written at during such summits of the BRICS, it contains some 60 to 70 articles. It's just a sort of a constitution. If you have ever seen Russian constitution with these dozens of articles, so that's kind of a document, is also produced by the BRICS. But this is in no way a constitution, of course, and no legislation that's going to be respected in the way that other legislative documents are respected. So what we're going to discuss again is a hypothesis. For example, we've got this group of countries, and at one of their summits, they decided to create a monetary union and introduce a single currency. Or maybe not a single currency, let it be called transactions currency, just to make transactions, cross-border transactions. So if we export something and import something from the BRICS and within the BRICS, we are going to use our own currency for that. For other transactions with the rest of the world, we're going to stick to the US dollar or the euro in order to make transactions with other countries. But inside the grouping, we're going to use our own transactions currency. Although we're going to have our own central banks still, because they will be responsible for the process for the internal monetary circulation and monetary policy. Maybe we will think about the creation of a sort of central monetary authority to just monitor interest rates, inflation rates, and maybe give some sorts of proposals as to what kind of a plan should we produce in order to go to a single currency. What's going to be the path? What you see here in this table is a 365-day program. This is a year program to introduce a single currency. This is a very short period for such a currency to be introduced. Why did I choose this particular program? Well, it is really convenient to measure everything in terms of years, right? Because GDP figures, inflation rates, interest rates, investments, monetary base, so they are very easily measured in years. Of course, we may find quarterly data, but if you take all those figures, put them together in one table, this is going to be very difficult to make a presentation out of that table. This table is going to be too large to use. Looking at this table, what you see is that in 2016, key interest rates in these countries were very, very different. Yeah. In South Africa, that was 7%. In China, close to 3%. In India, close to 7%. In Russia, that was 10%. And in Brazil, close to 14%. Brazil had the highest rate of refinancing. Today it's quite different, as we know, due to the coronavirus and the governments of these countries decided to take some emergency measures. So they decided to lower those key interest rates almost to zero. And in many countries also in the world we had the same situation. Also we've got GDP figures here, monetary base. What is most important here is the time that it takes to introduce a single currency. If we introduce a single currency in these diversified groups of nations, we got to have a single interest rate. That's the most important thing we got to agree on, right? That means, for example, I've decided to introduce this currency, and I decided that, well, China, of course, is not going to introduce a high interest rate. If it had almost 3% rate of refinancing, I don't think that they're going to make it 5% or 6%. Yeah? Why? Because China is a very highly growing country, rapidly developing country, and if they introduce a 5% interest rate, key interest rate, everything in this country in terms of investments and loans is going to be too expensive. Money is going to be too expensive to invest, and this is going to harm local businesses. That may also result in higher unemployment, which is not really good in this country, in this billion nation economy, billion people economy. So I don't think that they're going to allow that. A lower interest rate would be quite interesting for this economy because it will stimulate economic growth even further. Yeah, so let us agree on an interest rate of 2%. And you see the new rate of refinancing starting from year 2017 is 2%. In this according to this economic model which I created, that's going to be 2%. What's going to happen if I introduce that sort of interest rate in other countries of the BRICS? Well, in China I said interest rate was 2.9%. So this 0.9% decrease in the key rate is not going to harm the economy really too much. I don't think that's going to be overheat. I don't think that's going to lead to some financial bubble, these 0.9%, because we've seen decreases in key interest rates even much greater in the United States or somewhere else in Europe. They keep their interest rates close to zero, so I don't think that's going to harm China in any way. But what about Brazil, Russia? The countries with very expensive money. If we introduce next year such a very low interest rate of 2%, what's going to happen? Of course, the money supply is going to change. Money is going to grow in supply, right? Looking at these figures, what we see here, the money circulation in Russia in 2016 was $125 billion. If I introduce a 2% interest rate in Russia, the new money in circulation would be $209 billion. That's going to be an increase of more than $80 billion in money supply. Also, what I calculated is that, well, certainly that sort of money needs to be absorbed somehow, right? It's like a sponge effect. You got something that's going to absorb that sort of amount of money. your companies in your country should be really effective, and they should start working, even, I think, more productively, more intensively, in order to consume that amount of money. They're going to take in loans. They're going to take that money in loans. Maybe consumers are going to spend more money. Everything is going to result in very, very large inflation rates, very high inflation rates, right? So this is a very problematic issue. If I do that, that's going to maybe even lead to a hyperinflation. What I also calculated is that in a normal economy, in a year's time, in in Russia, for example, in order to consume $80 billion in new money supply, you got to increase the GDP by 66%. Is it possible for an economy to grow 66% in just 1 year? So I think you got a picture of what's going to happen in this economy. Certainly Russia is not going to react. Its economy is really going to be slow in its reaction, because you got to have more enterprises, more productive enterprises, and this money should be consumed very effectively and very efficiently, so that there won't be any money laundering activities and things such as these, criminal activities. You got to control it. The same thing happened to Greece. And in previous lectures, I described you the situation that happened in Greece after the introduction of the euro. In Greece, they had interest rates close to 18%. With the euro's introduction, this interest rate went down as far as 4 and 6%, just like in Germany or in Holland, in stable economies. Imagine what the Greeks felt after that. They started buying like crazy. There was a spending rush. They started buying everything on credit, and they became highly indebted to banks in Germany, in Austria, and other rich countries in the European Union. So this is what happened. And by the year 2008, their debt was so large that just one factor, the global financial crisis, triggered this domino effect, and Greece went bankrupt. It was almost damaged and swept. They thought that this country is going to leave the European Monetary Union in order to recover, that it's going to reintroduce its local currency, etc. So, from this picture, we understand that this is absolutely unthinkable and impossible and unwise, even ridiculous, maybe dangerous, to introduce a currency very quickly. So it must be a very, very slow process, gradual process, that should proceed in a number of years. And in order to get a better understanding of how we should do that, I also try to produce a sort of a plan of gradual harmonization of interest rates and other economic indicators. Harmonization is the process when everything gets closer to each other, right? We harmonize key interest rates, we harmonize inflation rates, loan rates, GDP growth rates also should be harmonized, because if we grow differently, if China grows 10% and I grow 1% a year, this discrepancy is going to lead to very dramatic consequences, right? Russia is not going to catch with China's economy, and it will be losing its competitiveness in this union. This is the most important thing. If you are in one union, in one monetary union, you got to be equally or almost equally competitive in terms of production, in terms of labor force, in terms of technology, and many other things. And we got to be on almost an equal footing to reach that agreement. So you absolutely sure not to come to such an agreement in 1 year's time. But if we take a longer view and introduce a single currency in a number of years, but we start this harmonization process today, we do it slowly, the effect from the monetary increase is going to be less effective, it's going to be less harmful. Yeah? For example, the year of this harmonization period started in 2016. Next year I'm going to decrease my key interest rates down to just 0.2% in Russia, 0.3% in Brazil, 0.4% in India, etc. Yeah, you understand that this very small interest rate decrease is not going to harm the economies. It's going to be really slow, this process of coming closer together. And by the year 2030, I finally introduced this key interest rate, that is going to be a key interest rate for this monetary union to be, this 2% interest rate. And this $80 billion in new monetary supply in Russia are going to be distributed over a number of years, over 14 years, right? 14 years, I'm going to distribute, I'm going to spread this amount of money equally, maybe some year that would be less, maybe the other year that would be more money increase in supply, but certainly it's not going to be so harmful like in the first example. The same goes for growth rates. Yeah, like I said, these countries are very, very different economic powers, and their GDP growth rates are very, very different. For example, when I started to create this model back in 2017, I did not think of coronavirus, and I did not think that we're going to have this financial crisis so soon. Although actually my model showed that we are going to have a recession by 2025. So for some reason my prognosis of GDP growth rates in these countries decreased all of those 5 countries by the year 2025. So I could expect such a scenario. Well, that is quite probable, because crises happen and go. Maybe a sort of a recession was possible. But I could not know, of course, that such a crisis would come so soon. It took almost 3 years, and this model could not be called adequate. That's what economists are always met with. We economists are always thinking about making prognoses for the economies, yeah, and we make models, econometric models. We use mathematical methods to create very different and very interesting things. And the economists at the European Monetary Union, when they started thinking about the introduction, I think they created a similar prognosis. They created a similar model to introduce. They simulated this model before they introduced this currency, of course. And I think they were very, very easy about the fact that their model showed a very optimistic scenario. They produced a very optimistic world in which they were going to live in 10 years' time, or maybe in 15 years' time. But they did not know, of course, that in 2008 they were going to witness the greatest financial crisis since the Great Depression. Who knew back in 2001 or back in 1995 in Madrid, when they were talking about the euro's introduction, that this is going to happen in 2008? They created very optimistic scenarios, and they said that the euro is going to benefit all countries. Just imagine if I were somewhere at the board of governors of a future to be central bank, and I was tasked with such a model, to create such a model and introduce it. And I was sure to introduce it, like I said. So sometimes economists and politicians, policymakers, they are the most dangerous people to listen to, and they are the most dangerous people because their policies are going to influence and affect the entire nations. Billions of people. Just do you feel the responsibility? Yeah, what kind of responsibility I had to take so that this model was introduced? And if it was introduced, what was the result of that? Yeah, what would have been the result? Economic growth rates, GDP growth rates collapsed in all these 5 countries, even in China, the most advanced of the emerging countries in the world. And this scenario is no longer true. So I got to introduce some corrections to this model, right? And certainly 2016 was not a very good year to introduce such a currency. Actually, the same thing happens with each and every other proposal in economic policy. For example, in 2004, when Tony Blair, then British Prime Minister, went to Poland, and he was trying to make other EU countries accept Eastern European countries in the bloc. He wanted these countries such as Bulgaria, Romania, Poland, he wanted them join the European Union. And he was campaigning. He went to Germany to talk to German Chancellor Gerhard Schröder, then Chancellor of Germany. Then it was Angela Merkel. So they have taken the decision to accept those countries, to let them in. And he also, at the same time, he also charged the leading economists in Britain to make a sort of a calculation. So that was quite clear that if we let those countries in the Union, yeah, we're going to open our borders, and these countries, their citizens, are going to enjoy the same rights just like our own countries, our citizens. That means, according to the EU Constitution, each and every citizen in the EU has a right to live and work wherever they want. So that means I am a citizen of Poland or Bulgaria, I can live and work anywhere in the EU, be it the UK, Germany, France, etc. And Tony Blair, of course, he understood that maybe there's going to be some immigration influx in the EU countries, in the richer countries of the EU. And he charged the leading economists in Britain to calculate how much that's going to be. And they calculated that only 13,000 people are going to immigrate to Britain a year. 13,000 people a year. They were hoping and they were expecting this immigration figure. And what happened in reality? In reality, 130,000 people immigrated to Great Britain each year. And by the end of 2016, the population of this country, of this 44 million nation in 2000, they grew with no, of course, like just any other developed country, England has no natural growth in population. Yeah? So, 1,000 people are born and 1,000 people die each year. So no growth in population. In 2000, the population of the UK was 44 million people. And in this nation, with no population growth, the population grew up to 69 million by 2016. Yeah? So that decision to let those countries in led to very dramatic condition in this country. It led to the situation that in some cities, for example in Southampton, almost a quarter of the population spoke no English. Or in Manchester, the same thing happened. And that was a threat to local culture, that was a threat to the prosperity of other people, because people started feeling like they were being pushed away from their own country. And that led to a wave of impatience, to social unrest, to street protests in this country, and they decided to leave the EU. So the country actually behind, one of the countries behind this enlargement of the EU, like I said, Tony Blair was one of the policymakers who wanted them in those countries. Now this country was against this union that they created and this project that they insisted upon. So imagine what's going to happen also. Leaving aside other things, I considered only the monetary side of this union, yeah? But what if we really created such a union in these 5 countries? What's going to happen not only with the, the monetary supply, we've considered that, yeah? It is quite workable. It's quite feasible if I take just 15 years and I introduce single currency by the year 2030. It's not going to really harm these economies if I decrease interest rates, if I decrease them slowly down to 2% by 2030. But what's going to happen with immigration? What's going to happen in Russia if I open the border with China and each Chinese person, each Chinese is going to have the same right with the population of Russia to work and live wherever they want? What's going to happen if I give the same right to Indians? What's going to happen in these billion people economies, billion people nations, with lack of territory, with lack of convenience, yeah, with lack of everything? And just imagine this huge territory of Russia and its empty streets in some of the cities and villages and all those national resources. Well, I think they will be able to get advantage of that open border policy, and there's going to be really dramatic changes in this country and this civilization. Very dramatic changes. If this influx of people is not controlled. So integration policies and such prognoses are very, very dangerous. Yeah. So in terms of figures, in terms of mathematics, everything works really great. These econometric models are very easy to implement, are very easy to do. And what you see here, for example, is the amount of money I'm going to put into the circulation each year. So instead of $80 billion in new monetary supply, money supply in Russia in 1 year, I distributed that into $1, $3, $4, $6, $5, $7 billion a year. I don't think that's going to be really harmful. Yeah, it's going to